Hey guys, Be Twice here. Today is Saturday, December 4th. Hope everybody is having a good weekend. I wanted to do one more video. I might do some more later today or tomorrow, but I wanted to do one more video looking at the weekly chart of the S&P 500. So this is the weekly chart of SPY. Um, I wanted to take a look at just a higher level count. I obviously just put out a video that showed the bear and bull counts and where it could be going. So I want to talk about the bear and bull counts and where it could be going on a weekly chart so you guys can get a better view of where it could actually be going or what we might see if it breaks down or if it breaks to the upside. So with all that being said, let's take a look at this. So back here at the COVID lows, I have that pegged long term as a super cycle wave 4. And what that means is that we're in a super cycle wave 5. So to finish off a complete super cycle wave 5, we're going to see another 5 waves of cycle. So right now, there's 2 ways that this could pan out. It could either be that we've already had 5 waves to the upside, which you can clearly see 5 waves, right? One, two, three, four, 5. So this is a primary 5 that's not, we didn't extend in wave 5. So we did not extend in wave 5. If you're a bear, this is what you believe. We didn't extend in wave 5. So here's our primary 5 peak, which takes us to a cycle wave 1, because that's how it works. You go from intermediate to primary to cycle to super cycle. So this would be a cycle wave 1, meaning that we're in a cycle wave 2 and we're pulling back. So if we're in a cycle wave 2 and we're pulling back, well, we would take a retracement from the low. So you can see I grabbed it from the low and I took it off the high. So you go from low to high and then you look at your retracement, your Fibonacci retracements, and say, okay, where could it go? Well, the most common place to find a wave 2 bottom would be the 61.8. That's all the way down here at 315 on SPY. I don't think it would go that low. Even if the bear count is right, I just don't see it. So I grabbed the pivot AV WAP from the COVID low, and let's see where that's going. Well, right now that's in between the 50 to the 38.2% retracement. So the 38.2 is common of a wave 4. But even with that being said, if the bears are right and we do blow through the 30-week MA here and we go into a bear cycle, if we really do go into this bear cycle and we crash lower, I think we'll probably find bottom somewhere around this pivot AV WAP. I think there'll be a lot of buyers down here, and I think it's gonna be very, very difficult to get too much lower. So I would favor the 374, but it is possible to go all the way down here to 315 or even lower. I just don't think it would. So bears, you already have pegged this as a 1, 2, 3, 4, 5, and that obviously now we're just in this corrective sequence we might see for the next few months. It might take a year. Who knows how long it'll take us to bleed out down here? But bears, that's what you see happening. Generally, when you get into an actual bear market, it takes longer versus just a flash crash. Obviously, back here on the COVID crash, we were still it was kind of it didn't end up being a complete bear market. It was just a flash crash due to outside news. Obviously COVID took the world by storm and it just completely nuked everything right down to this super cycle wave 4, and then we quickly bounced back over several months and got right back up to all-time highs. And since then, obviously with the Fed and QE, um, we've just kind of just steamrolled ahead. So now where's this thing going? So either the bears are right and we're crashing down here, or maybe the bulls are right. Okay, well, what if the bulls are right? Well, where's this thing going? Okay, well, then that means that we haven't peaked, right? So we're still in our wave 5, which is very possible. So we would be moving our wave 1 somewhere higher. So if the bulls are right, this first peak up here is not a primary 5. It's an intermediate wave 1, meaning this is a 1 and we're pulling back for a 2. So where's wave 2 going to bottom? Well, look at the 30-week MA right here. So obviously we kissed it last time we pulled down. Back here, we almost touched it. It's a very common place when you're in the end or intermediate or getting towards the late cycle. It's very common to start pulling down towards the 30-week MA, and sometimes even kind of break beneath it and then rally back up before eventually getting beneath it and then trying to retest it and then eventually just dumping to the downside. So we could easily come down here into this 440 range, kiss it, and then rally right back up to this uptrend line, right? So there's still this line right here that we've kind of been kissing. So we take our tool, our Fibonacci extension. So here I'll show you guys how I did this. You take your Fibonacci extension tool, so you grab the bottom of your last way, the pivot, you go to the peak and you pull down to where your expected bottom would be, right? So let's just say we do just bottom right at this 30-week MA. If we do bottom at the 30-week MA, our wave 3 price target is going to be the 161.8. The 161.8, look at that. It kisses the trend line. Interesting. And when it does right about 520. So if this does end up being bottom, we could expect 520 sometime by March. See how it kind of hits the trend line right around March? My expectation is that by March, we'd be trading at about 520 a share. From there, we'll pull off of it, and usually wave fours end up being the 38.2. The 100 extension ends up being the exact same thing as the 38.2. So you can just have your tool automatically set to be the 161.8, and the 2. What that ends up being is that your wave 3 price target is your 161.8. Your wave 4 price target ends up being your 100 extension, and then your wave 5 price target ends up being your 200 extension or your 2. So what you'd see is that we'd be hitting 523 by March. We'd pull back for our wave 4, and then we'd rally up for our wave 5, and our wave 5 would hit by May. So it looks like our top of our cycle would actually be May 31st. So, and then from there, that's when we would end up getting our pullback for wave 2. We would have to draw a new retracement. So I'll show you guys how to draw that real fast while we're kind of in here. And I'm kind of showing you guys a little bit of educational tools here. So you would take your retracement from the bottom to your peak. So our peak's up here at 542. And then at that point in time, we would be favoring the 61.8 retracement, taking us down to 342. You could look to see where the pivot AVWAP is. Maybe at that point in time, it's up here at 420, 419 area. Who knows? But with all that being said, let's take a look at the indicators real quick. I was about to skip it, but let's look at those, and then we will end the video. So indicators, RSI, we looked at in the last video. Same exact thing. Every time we kiss this upper trend line, we get rejected off of it. But now look at this line right here. It looks like the last time we bottomed, we hit this trend line and we're about to hit it again. So bulls, it's very, very important that we get a rally now. If it breaks this line, sure, it could go a little bit beneath it like it did here, but I don't think it'll build well. I think if we go beneath it, it's probably over with because the MACD is already curling down. It doesn't look like it's mattered too much on the weekly. Recently, it's kind of been up and down, up and down, up and down, but it doesn't look good, especially because back here, you look at this one, you're like, oh man, look what happened back during the COVID crash. We died when we crossed beneath it. So hopefully that's not the case here, because if we were to draw a line over this one, and then assume that the next one's going to go all the way down to the trend line. So let's see that. Let's just draw it real quick while we're doing it. So we draw a trend line like that. So if we're expecting that this MACD is going to come down and kiss that, we're probably talking about pulling back into 400 a share or something like that. So let's hope the top's not in, because that's a pretty steep drop. But then we look at the percent R, and when we look at the percent R, you can see when you draw this line across, it's also an area of interest, right? Normally, when you have areas of interest on all the indicators, you'll see it. And I kind of use all of them because there are times on the hourly where one indicator is going to tell you something while the other one's not. Sometimes you're going to see bullish divergence on the percent R when you don't see it on the RSI or MACD, or vice versa. So that's why I always commonly have all three of them up, is mainly because I'm swing trading hourly charts. On the weekly, it's not as big of a deal because you're going to see similar type stuff on all of them. But when you draw the line across on your percent R, you're going to see that this is also an area of interest, right? It was the same area that we caught our last low, and it looks like, yeah, we've gone beneath it and we've struggled to get above it. So it's definitely an area of interest. So we should be seeing something happen very soon. We're going to flush right beneath it, or we're going to get our pops to the upside. So bears are bulls, hopefully you're right for however you're trading, but always be mindful of the alternative so that if you're wrong, you can adjust your trade. You don't want to be a bear and end up seeing this thing bounce and then stay bearish because you're going to get nuked. If you're a bull and you see this thing go through the 30-week MA and you don't change your stance to be a bear, you're going to get nuked. So the market is ever changing. It's going to do what it wants to do, and we need to use price action to determine how to trade it. And you need to know and accept when you're wrong. If you take a trade and you're wrong and you don't accept it, you're going to lose your money if you don't get out. So the market is all about knowing where to place your stops and knowing when you're wrong, knowing when you're right, how to ride winners and how to cut losers. That's what it's all about, guys. All right, if you like these videos, please like and subscribe. If you want to join the Discord, the link will be up. It is free. I will post my charts on a daily basis, and if you ever have questions, feel free to reach out. All right, thanks, guys.